So who's more valuable to their clients, a CPA or a financial advisor? And here's where this question is coming from. I'm so sick of seeing comments from both sides over the years about each other. Like the CPA says the advisor is what? Focused on money, only worried about making money and closing the deal. And the advisor saying to the CPAs, man, you guys are deal killers. You're professional skeptics. So what's the answer? Like, who actually is more valuable to their clients? Let's be fair. Both have pros and cons, right? Both industries, both professionals have strengths, have weaknesses. So let's just break it down, and we'll start with the CPA. We'll do pros. I can't wait to see the comments here to see if people agree or disagree with me on these. Pros and cons, okay? What comes to mind for me right away on the pros of the CPAs? They tend to be steady, right? They tend to be steady. If you're using the analogy of like a semi-truck versus a little Porsche, the CPAs are more of the semi-truck. Like they're pretty much cruising, and once they get cruising on that freeway, they're not making quick turns, which is, I think, one of the reasons why it leads to the second pro. They are trusted. They are trusted, right? They're trusted by their clients. They're steady. They tend to be, as a generalization, they tend to be focused on their clients. Like, I think they genuinely do want to bring clients value. Now, I say this myself coming as a licensed financial advisor, but my partners are CPAs, right? So we own companies together. I've worked with hundreds of CPAs, thousands of financial advisors as a little background there. All right, so they tend to be steady, they tend to be trusted, they tend to be focused on the client value. Those are all great things. Now, what are the weaknesses of the CPA? Well, the weaknesses, first of all, is they have a very inefficient, and if I misspell any words live, it is what it is. It's hard to multitask. Inefficient business model. What do I mean by that? This idea that you're charging for your time, a couple $100, $500, whatever your hourly rate is, has an upside potential of how much you can make. Like, time is a finite resource, right? Or you're charging by a tax return, a couple $100, $500, $1,000 for a tax return. Like, that's an inefficient business model at its core, okay? So you have an inefficient business model with a ceiling. So I think that is one of the cons of CPAs. And how that relates to clients is you have bandwidth issues. Like, you can only deliver so much value because you can only spend so much time with each individual client. What else? You know, a lot lack sales experience. Now you might say, if you're a CPA watching this, well, that's good, I'm not a salesperson. Yeah, but sales isn't just selling like a sleazy watch salesman, like trying to sell something that they think you need. No, sales is an ability to communicate and lead someone to do something if it wasn't for you, or that they wouldn't do if it wasn't for you. Now, sales with bad intentions, terrible thing. Sales with great intentions, you can change the world, right? Think about companies and politicians and leaders, like they use sales ability. So lack sales experience is a real con. They have an inability a lot of times to lead their clients or to communicate to their clients in a way that actually results in that client doing something if it wasn't for that they wouldn't if it wasn't for the CPA. Okay, so lack sales experience, and then the biggest one that biggest issue that I have is by far they tend to be reactive, right? That means they are recording history, more compliance focused than proactive, meaning like what strategic moves can we make to make sure that this year looks better than last year for you. Okay, so steady, trusted, clients value, great things, inefficient business model, lack sales experience, reactive. Those are cons to the current CPA environment. Now, okay, let's talk about the financial advisor. We got pros. What are the pros? Well, they tend to have a better business model, meaning there's much more upside to the model itself. And listen to me, I'm not just talking about people selling products and then like piecing out. That's a salesman. I'm talking about a true financial advisor that is there with their clients, helping them accomplish their goals, right? They have a much better upside potential, okay? That is a pro to the business model because they can bring more value to clients because they can afford to do that. It's inherent within the model. They tend to be better at sales, and I'll say sales or communication, because there is a lot more training that financial advisors have on this than CPAs have, right? There's a lot more training that goes into the ability to communicate, lead a client, influence a client that advisors have than CPAs have. And they tend to be proactive. Like a reactive financial advisor is a financial advisor that doesn't last very long. They're a financial advisor that's driving some Lyft or Uber on the weekends or evenings, because a reactive financial advisor is, well, they're probably not going to make it. So by nature, we have learned to be proactive. Proactive can be a great thing. We can get ahead of client problems, okay? So better business model with the upside potential, tend to have more experience and training around sales and communication, and tend to be taught to be more proactive. All right, now let's talk about the cons of financial advisors. They tend to be more opportunistic. I may have spelled that wrong, but you get the idea. They tend to be more opportunistic. Is that a con? Well, it oftentimes results in starting and stopping a lot of different activities and not seeing something through. So I use the example of the semi-truck for the CPAs. The advisors tend to be a little Porsche, right? They tend to like make turns very quickly and speed up and slow down, and lose enthusiasm, but they're also quick starters. So that, again, pros and cons. Now, so we have multiple companies, one of which is called Hayden Rock. We train and consult CPA firms. The other one is the Elite Companies, and we train and consult financial advisors. So we see this on a daily basis, this difference in the wiring. So tend to be more opportunistic, which means they might not be as steady as the CPA. Like the number of CPAs that start something is much lower with our company, but they see it through. Whereas the advisors, the start is much higher, but then the drop off is much more significant than the CPA. They also are not as trusted. They are not as trusted, and that's not just like an opinion. That is, if you look at, for example, the annual Gallup poll of trust and credibility, sorry buds, financial advisors are near the bottom. Like you got the used cars salesmen, bartenders are above the financial advisors. So they tend to be less trusted, and I think that's because this industry has tended to attract people that are more driven by and more focused on the money. Now, of course, again, that's not everyone. Oh, I'm losing my cons. That's right. I'll try it up a little higher. Money. It has tended to attract people that are more motivated by the money than the CPA. You know, I would guess most advisors in the top 3 to 5 motivations of getting in the space is financial upside. It's probably not the same with the CPAs. You know, if you were to survey 100, it's probably not the same. Now, let's get back to the question of who's more valuable. Who is more valuable? Either is my answer. Either is more valuable, or either can be more valuable. And here's the distinguishing difference. Neither by themselves are nearly as valuable as both of them together. Think about it like this. What sport, like think about basketball, okay? Michael Jordan versus the current, choose any professional team in the NBA, and Michael Jordan at his very best. Who's gonna win? Any team right now in the NBA. Or put LeBron James in there. Any team right now in the NBA playing LeBron James, if LeBron James is one-on-one, is going to lose, right? And that's the exact same situation you have right now. And I don't understand why the industries right now are so slow to really adopt this. But that's the same dynamic you have going on with CPAs and advisors. They're like, there's so many that are still fighting to play singles basketball when there's no rules against building a team. So who's going to win? A team with a CPA, a financial advisor, maybe a good attorney, and a couple other experts, versus like the CPA that thinks they're the best CPA. They're one-man stop, or the advisors the same way. You know, we get these comments all the time. I've been in the industry for 35 years. I'll put my technical expertise up against anyone. So what, man? Like, you probably know a lot more than me, but guess what? I've got a team, and my team will dominate your ability to deliver service to clients and solve problems any day of the week. There's 80,000 pages of the tax code. You're telling me you're an expert in all of those? And even if you are, what about when we start getting into legal issues or business advisory issues or risk mitigation issues, right? Succession planning, like the list goes on and on. So which individual is more valuable? The individual that has an all-star team behind them. The dream team in the Olympics was valuable for one reason, because they came together as an incredible team and would dominate any individual. It wasn't one individual on that team that made them the dream team. It was the team, all right? So to wrap up this video, you know, both are incredibly valuable. That's why we exist, right? Both advisors and accountants, incredibly valuable. But we also both have weaknesses. So the discussion is, let's get away from this ego-driven who's better than who or who's more valuable than who, and rather focus on, do the strengths that you bring to the table complement my weaknesses? And do you and I together, either as a proactive planning team, just us, or with other professionals even better, do our strengths offset each other's weaknesses to ultimately create a more powerful and more valuable team for what? For the clients. For the clients. And yes, of course, for your business, for my business, a better work-life balance, leveraging the upside of a revenue potential, you know, enjoying business more, leaving a legacy, creating something of value. All these things are wonderful, but of course, at the end of the day, it only happens if we're delivering more value to clients. So that's it. If you like this video, do me a favor. Hit that thumbs up button for me, please. That helps the YouTube algorithms just know that these videos people are actually watching. And leave a comment. I'd love to know what you think about this. Do you agree or disagree with any of the pros and cons? Have I left off any major things here? And any other questions for us? Please feel free to type them in chat box below. I will also be sure to include a link to our calendar if you do want to set up a call, talk to us at all about our training of how to build your own dream team within your practice. I'd be happy to do that with you. All right, thanks so much, everyone.